In today's show, Bitcoin rejects near 37,500 as on-chain data shows capitulation from the short-term hodlers, which are pretty much the retail investors being scared out of their positions with massive FUD right now. In today's show, I'll be breaking down the latest technical analysis. Also in today's episode, veteran trader Peter Brandt sees Bitcoin crashing further after May's 50% drop. That's right, he recently tweeted, challenged the Bitcoin price historians. In the past 10 years since May 2011, please identify a single, even one instance when a 50% plus correction did not lead to at least a 70% correction, when a 50% plus correction made a new all-time high within 7 months. Statistician Willie Wu responded to Peter Brandt. I'll be breaking this down for you. Also in today's show, Bitcoin price bull run starting to look like 2013 after record red monthly candle. That's right, Bitcoin may have just had its worst monthly candle in 10 years, but it could still surge to new all-time highs this year, says popular crypto analyst PlanB. He recently tweeted, new dot, May close $37,341, down 35%. We knew Bitcoin would not go up in a straight line, and several 35% drops are possible and indeed likely in a bull market. Starting to look like 2013, stock the flow X model intact, which predicts a $288,000 Bitcoin price before the end of this year. Also in today's episode, here's what's next for Bitcoin as it enters sweet spot of Supercycle, according to Dan Held. That's right, he points out that ARK invested in analysis where if 10% of U.S. public company treasuries were put into Bitcoin, Bitcoin would be worth $400,000. The early Bitcoin investor says that Bitcoin is entering a sweet spot in the next 4 to 8 months that could launch Bitcoin into the high six figures. I'll be breaking this down for you. We'll also be taking a look at the overall crypto market. As you can see, Bitcoin correcting barely in the red. We have Ethereum in the green along with most of the major altcoins. But where's the Bitcoin price likely to go next? Find out all this plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day, so be sure to smash that subscribe button. That's right, turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And before I kick off today's show, today's episode is brought to you by our sponsor Blockfi, the leading provider of financial products and services for crypto investors. Here's where you can put your crypto to work. They're currently paying out a 5% annual percentage yield on Bitcoin, so you can literally have your Satoshis work for you. They're also paying out a 10% APY on stable coins, and they have a new product, which is their Blockfi Bitcoin Rewards Visa credit card, which you can see right here on your screen. Here's how it works. You'll earn 1.5% back in Bitcoin on all purchases where Visa card is accepted. Not only that, there's a special promo they're running right now where if you use my referral link in the description right down below, you'll earn 3.5% Bitcoin back on all purchases. They also recently ditched their annual fee, truly making this offer a no-brainer to take advantage of it and get on their waiting list today. Be sure to use my referral link in the description right down below. You also receive up to a $250 crypto bonus with a deposit of $100 or more. So what are you waiting for? Click the link right down below. Let's start stacking those sats and get your Bitcoin Rewards Visa credit card today. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. We have a lot to cover, so let's dive right in. Bitcoin started the week off on an abrupt bullish breakout to 37,500, a level some analysts have identified as a crucial line in the sand, but the rally was short-lived as Bitcoin met selling near the lower arm of the bearish pennant that can now be seen on multiple timeframes. While many traders are concerned that the 2021 bull market is now over and considering whether gains should be locked in, on-chain data shows that long-term Bitcoin hodlers have been accumulating in preparation for a potential 2013 style double pump that has the potential to elevate Bitcoin to a fresh new all-time high. As you can see right here on your screen, it shows you the Bitcoin one-day chart. Now Ethereum, on the other hand, rallied 8% to $2,677 as chatter about a possible flippening between Bitcoin and Ethereum continues to be a hot topic of discussion. And most recently, Bloomberg speculated that Ethereum could one day surpass Bitcoin as the world's cryptocurrency of choice. Now, personally, I feel that Bitcoin and Ethereum are not competing, and I do not feel that Ethereum will overtake Bitcoin as a store of value because Bitcoin is decentralized and there's a hard cap limited supply of 21 million Bitcoin which can ever be in circulation. So it has true scarcity, making Bitcoin the hardest form of sound money to ever exist. So why is the Bitcoin price continuing to crash? Well, short-term hodlers are feeding the sell-off, which are mostly retail investors. Further insights into what is feeding the uncertainty in the markets can be found in the most recent week on-chain report from Glassnode Analytics, which looked at the activity via short-term hodlers, who are newer market entrants holding coins younger than 155 days, and long-term hodlers whose coins are older than 155 days, according to the average spent output lifespan metric, which provides insight into the average age of all UTXOs spent that day. Long-term hodlers primarily held through the recent dip, as evidenced by the ASOL metric, falling dramatically back to levels below the accumulation range seen between $50,000 and $60,000, as you can see right here on your screen. This says it all. The long-term hodlers are continuing to accumulate, along with the rest of the smart money and institutions, while the retail investors / short-term hodlers are selling, which is causing this sell-off. Further proof that it has been the short-term hodlers who are behind the sell-off can be found by comparing the amount of on-chain Bitcoin transfer volume that is in profit long-term hodlers to at a loss of short-term hodlers. According to data from Glassnode, long-term hodlers were seen taking profits early in the 2021 rally from $10,000 to $42,000 before their spending reached a fairly stable baseline, with last week's sell-off having little effect on their spending patterns, indicating that long-term hodlers are generally unwilling to liquidate coins at reduced prices. That's right, hodl be thy name. This compares to the behavior of short-term hodlers who increased their spending by over 5x during the sell-off, with the maximum spending occurring near the current local low of the market. Now, evidence of this can also be found in a review of the spent output profit ratio, known as the SOPR, for short-term hodlers who continue to realize losses by spending coins that were accumulated at higher prices at the current lower prices, indicating capitulation. As you can see right here on your screen, it shows you the short-term Bitcoin hodler SOPR, brought to you by Glassnode Analytics, and quoting them right here: without doubt, the current market structure is best described as a battleground between the bulls and the bears, with the clear trend forming between long-term and short-term investors. This is a battle of hodler conviction and immediate buying power. That's right. So where are my hodlers at? Holla at your boy in the comments right down below. And before I break down our next story of the day, veteran trader Peter Brandt sees Bitcoin crashing further after May's 50% drop, as well as this Bitcoin price bull run is starting to look like 2013 after a record red monthly candle, as well as here's what's next for Bitcoin as it enters a sweet spot of Supercycle, according to Dan Held. But first, let's take a quick look at the overall crypto market. We can see Bitcoin currently correcting down about 1.5% for the day, trading just above 36,200. We have Ethereum up 1.5%, trading just under $2,600. We have Binance coin up almost 1%, trading at about $348. Cardano up 1.3%, trading at $1.70. XRP up 0.23%, trading at $1 even. And Chainlink up 3%, trading at about $30. All right, now let's break down our next story of the day. Bitcoin faces the prospects of falling further, even after its price made a strong recovery after crashing from $65,000 to $30,000 last month in May. So it reflects in the latest statements from Peter Brandt, chief executive of global trading firm Factor LLC, who questioned, if not asserted, the longevity of the ongoing relief rally in the Bitcoin market, especially after a 50% plus price crash. The veteran commodity trader challenged Bitcoin price historians to identify a single instance in the last decade that saw Bitcoin logging a new record high 7 months after crashing more than 50%. He also asked to refer to one case when a 50% decline in Bitcoin's price did not lead up to at least a 70% correction. As you can see right here in this tweet, challenged the Bitcoin price historians in the past 10 years since May of 2011. Please identify a single even one instance when a 50% plus correction did not lead to at least a 70% correction, and when a 50% plus correction made a new all-time high within 7 months. And statistician Willy Woo responded, all drops of that scale with long recoveries was from a starting point where price was overextended above fundamental valuation. This setup is different in that the price is below fundamentals. As a guide, the COVID dump dropped below fundamentals and therefore recovered quickly. And he also added comments asking for expansion of fundamental valuation. Stock the flow using scarcity valuation of the network is approximately $60,000, while the NVT price using investor volumes puts value at $54,500. A thread about NVT, one of the first on-chain signals first published in February of 2017. This is a 2021 rehash of my NVT learnings. Since then, how to use on-chain volume to establish a fundamental valuation for Bitcoin. And right here, you're looking at the Bitcoin NVT price. And Willy Woo goes deep in this Twitter storm. As you can see right here, I'll include this in the show notes below the video in the description, but it looks like he's taken Peter Brandt to school. Now, this guy, John Herr, responded to Peter Brandt with two instances. Number one, March of 2020 and the 2013 bull run. That's right, the March 2020 rebound, where Bitcoin's price recovered to its all-time high above $20,000 8, if not 7 months after crashing to $3,850 in March from its long-term cyclical high of $13,880 in June of 2019, and the 2013 bull run that saw the cryptocurrency rising by more than 2,450% 8 months after bottoming out near $45 and an 80% overnight crash. And as you can see right here on your screen, it shows you the Bitcoin price action from April to November of 2013. And Peter Brandt said nope to both apprehensively because Bitcoin's prices took an additional month to reclaim their record highs in both cases. Nevertheless, the veteran's questions remain cryptic enough due to its selective time frame and as to why they were attempting to prove about the crypto market bias in the first place. And on May 12th, the U.S. Bureau of Labor Statistics revealed that the country's consumer price index had risen to 4.2% year over year, logging its fastest climb since 2008. That tends to increase Bitcoin's appeal among individuals and organizations looking for hedging against inflation in the long run, especially as higher consumer prices punish savers by forcing the US dollar valuations lower. This is the number one reason why I am bullish on something like Bitcoin, says Anthony Pompliano, investor at Pomp Investments in January of 2021. Quoting him here, "It's the single greatest protector of wealth in the world. There is extreme volatility in the short term, but over a long period of time, Bitcoin shines. It does a great job of preserving purchasing power and avoiding the perils of fiat currency devaluation." That's right, I'll take the extreme volatility all day because volatility equals life force. Meanwhile, some analysts anticipate Bitcoin to continue declining, much in line with what Brandt hinted. One of them is Richard Durant, an analyst at Morgan Stanley, who called Bitcoin a sentimental asset that cannot rise without positive price catalysts, adding that it is unclear at this stage what they can be. And meanwhile, Peter Brandt, who correctly predicted the 2018 Bitcoin price crash, appeared more technically focused on the next market outlook. In March 2021, he anticipated that Bitcoin exchange rate hit $200,000 in either the third or fourth quarter this year. Also keep in mind that Brandt was also one to decide that he should keep his money in equities instead of cryptocurrencies, just as Bitcoin prices were approaching a breakout move above $12,000 in September of 2020. And we all know Bitcoin closed the year at around $29,000, so he missed out on that bull run. And also in March of 2020, Brandt anticipated Bitcoin to fall all the way down to $1,000, but the crypto reversed its bearish course upon testing upper $3,800 levels as support. So we all know Peter Brandt has been wrong plenty of times, but do you feel he is accurate with this call that the Bitcoin price will continue to correct further below the $30,000 bottom? Let me know if you agree or disagree in the comments below. Now, before I break down our next story of the day, Bitcoin price bull run starting to look like 2013, as well as here's what's next for Bitcoin as it enters sweet spot of Supercycle, according to Dan Held. But first, let's take a quick look at the overall crypto market cap, sitting just above 1.6 trillion with 114 billion in volume in the past 24 hours, and current Bitcoin dominance at 42.1%, with the Ether dominance at 18.7%. Now checking out the top gainers within the top 100, we have Kusama up 13.5%, trading at $365. Theta up almost 13%, trading at $7.59. Theta Fuel up 11%, trading at 35 cents. Now checking out the top losers within the top 100, we have Telcoin down 4%, trading at 3 cents. Helium down 4%, trading just under $16. And Revain down 4%, trading at 1.2 cents. Now out of this list of the biggest gainers and losers, which altcoins are you currently most bullish on during this bull cycle? Let me know in the comments right down below. Now checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated a 20 in extreme fear. Yesterday was an 18, last week a 22, and last month a 66 in greed. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That can be a great buying opportunity, aka BTFD. Buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. All right, now let's break down our next story of the day. Bitcoin may have just had its worst monthly candle in 10 years, but it can still surge to new all-time highs this year, according to popular crypto analyst PlanB. In a new tweet this morning, the creator of the stock-to-flow based Bitcoin price models says that Bitcoin is behaving like during its 2013 bull run, as he shares here in this tweet. New dot, which you can see is orange, May close $37,341, down 35%. We knew Bitcoin would not go up in a straight line, and several 35% drops are possible and indeed likely in a bull market, starting to look like 2013. Stock to flow X model intact, as you can see right here. Now stock to flow X predicts a $288,000 Bitcoin price before the end of the year, and according to PlanB, the stock to flow is still intact even after the worst performing month in Bitcoin history of the past decade. After it's dropped to 30,000 and several retests of that level, concerns are starting to appear over a bigger drop, taking Bitcoin towards $20,000 and lower. This would mean that for the first time, Bitcoin crosses the all-time high from a previous bull market, in this case from 2017. For PlanB, however, such an event is unlikely, capacity. Moreover, recent price action is far from unheard of. In fact, it could just mean that the market is rehashing its 2013 rather than 2017 performance. Also, Max Kaiser echoes the sentiment. He predicts a new all-time high by June 4th, which is now only 3 days away. I covered this in greater detail in yesterday's episode. If you missed it, be sure to check it out. Now, Stock to Flow X places Bitcoin in multiple phases, in which it goes from a fringe phenomenon to a full-blown asset class. Its ambitious forecast call for an average Bitcoin price of $288,000 during the current halving cycle, which runs between 2020 and 2024. The pullback sparked questions over the model's longevity, which PlanB has always stressed is not guaranteed. Nonetheless, with its demand still met by the market, the 2013 narrative remains a strong contender for explaining Bitcoin's wild ride this year. Right here, you're looking at the Bitcoin 1-month candle chart back from 2013, and accumulation practices among the long-term hodlers may also result in a double top scenario playing out in 2021, just like we witnessed back in 2013. Now, who do you agree more with, Peter Brandt or PlanB of the stock to flow model? Where do you feel the Bitcoin price is likely to go next? Do you think we'll bottom below 30,000, or do you think we are still on track to witness a six-figure Bitcoin price this year? Holla at your boy in the comments below. And before I break down our final story of the day, here's what's next for Bitcoin as it enters sweet spot of Supercycle, according to Dan Held. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 800 plus videos right here on my YouTube channel. Also, some very helpful resources for you to plug into, including my daily letter, which goes out to over 30,000 subscribers every single day. To subscribe, visit letter.cryptonewsalerts.net. Also have a blog I update daily, which could be found at cryptonewsyes.com. Also, be sure to smash that subscribe button right below this video and turn on all notifications to receive daily premium crypto news alerts every single day, just like this. You can also find me on Spotify, the home of the Joe Rogan Experience. We just surpassed 500,000 podcast downloads for the month of May, so I greatly appreciate your continued support. You can also find us on iTunes. You can also follow me on Twitter. My Twitter handle is cryptonewsyes. And for those of you on Facebook, I do have a private crypto Facebook group entitled Crypto Alchemy. To join it, click this link, request to join. I'll be sure to plug you in. And for those of you on Telegram, I do have a private crypto Telegram chat, which is uncensored. To join it, click this link. You automatically be added, and I'm looking forward to connecting with you personally on the inside. And for those of you on TikTok, be sure to follow me there. All right, now let's break down our final story of the day. Dan Held, Bitcoin bull and head of marketing growth at crypto exchange Kraken, says that Bitcoin is entering a period he refers to as a sweet spot of a possible super cycle. Held previously turned heads when he coined the term super cycle, which refers to a wild parabolic rally in Bitcoin driven by various catalysts, including the entry of institutional money. In a new interview with Blockworks, Held mentions that institutional buying of Bitcoin may be a big sign that the super cycle is coming to life, with huge unexpected rallies on the horizon. Quoting him right here, the institutions coming in are a big signal for a super cycle as well, because it totally changes the dynamic of how much money can flow into this space and what size. Some of these pension funds have a minimum of $1 billion investment. That's a lot of buying power to buy Bitcoin, and that means that Bitcoin price needs to move up to accommodate all these new market participants. ARK Invest did an analysis where if 10% of U.S. public company treasuries were put into Bitcoin would be worth $400,000 per BTC. The early Bitcoin investor says that Bitcoin is entering a sweet spot in the next 4 to 8 months that could launch the world's leading crypto asset into the high six figures. Quoting him again here, over the next, I would say, 4 to 8 months is our sweet spot of when we should see the peak of the bull run. It could be another 12 months, but we will either see if my thesis is validated or invalidated. It will be interesting to see what happens this year and early next year. And like hedge fund superstar Cathie Wood, the Kraken executive also predicts that central banks may be forced to buy Bitcoin. What happens when the world comes to recognize Bitcoin's value? It's been largely considered to be a weird libertarian Luddite currency for such a long time. What happens when everyone FOMOs in? What happens when central banks start buying? What the super cycle fundamentally describes is that this time will be different, and there's a chance that there could be an incredible bull run where we can see the world come to realize Bitcoin's value and what happens when that occurs. Now, how many of you agree with Dan Held that within the next 4 to 8 months, Bitcoin can see a super cycle that can push the price above $500,000? Let me know your thoughts in the comments right down below, and I'll include this interview in the show notes below the video in the description. Now for a quick recap of what I covered with you right here in today's show. Bitcoin rejects near 37,500, which is the crucial line in the sand as on-chain data shows capitulation from short-term hodlers, aka retail investors. Also in today's show, I shared that veteran trader Peter Brandt sees Bitcoin crashing further after May's 50% drop. Also in today's show, we discussed this Bitcoin price bull run starting to look like 2013 after after record red monthly candle, as PlanB points out right here. Also in today's show, we discuss what's next for Bitcoin as it enters sweet spot of Supercycle, according to Dan Held. So where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button. That's right, and turn on all notifications to receive daily premium crypto news alerts every single day, just like this.